Cruise lines have been one of the biggest hit industries since COVID. Probably them and airline. I'm going to show you Norwegian and CCL. We're going to go through them. We're going to put a valuation on them. And for you traders, stick around to the end. I'm going to hit how to trade them. So the first one I look at is Norwegian. Now, let me pull something up. This is from Carnival's website, but it really is across the whole industry. This is something that was very, very important. The CDC got rid of these protocols that were going on ships. This is really what hit cruise lines a great deal. So now that they have kind of control of their own future, the CDC has said, okay, it's safe for you guys to get back on the water however you want to do it, as long as you put some type of your own protocols in place for COVID, you're good to go. So this is a big hurdle that the cruise line industry needed to get over, and they did get over it. So let's look at Norwegian. They just reported earnings. Now, something that I really need to pay attention to as an investor, I need to look at the occupancy. If you've watched a morning show for any length of time, I've said there's need to be two things. There needs to be people getting back on boats, and not only getting back on boats, not getting back on boats at an 80% ticket discount. You need to get back on boats at 100% ticket levels of what they were pre-COVID. So right now, occupancy in the second quarter was 65%, in line with expectations, 17-point improvement over the previous quarter, which is great. That means that people are coming back on ships, and all the numbers that I've been seeing, people are going back on ship. Numerous voyages across several key markets achieved occupancy levels north of 100% during the quarter. Occupancy is expected to average in the low 80% range in the third quarter, with July voyages averaging 85%. So what does this tell me? This tells me that people are going back on boats, and people are going back on vacations, and they feel safe going out on the water again. This is a wonderful thing, and I'm sure I can look at Norwegian, I can look at Royal Caribbean, I can look at CCL. They're probably all going to be in that similar situation. Now, this is another important part in what I just talked about. They're experiencing strong ticket pricing and onboard revenue generation. This is what we really needed to see. With total revenue per passenger cruise day up nearly 20% in the second quarter versus 2019. So they're going back to 2019, comparing these numbers and saying, okay, things are getting better. This is great. Momentum continues in terms of financial performance, with company generating an operating cash flow of approximately $260 million in the quarter. Now, pricing continues. I want to highlight this again because these are my two big things. Remember, getting back on boats and getting back on boats at correct pricing. Pricing continues to be significantly higher than 2019. Thus, record levels for 2023 are expected. And guys, remember, you need to have higher prices right now because of everything that's going on with costs and gasoline prices, etc. It takes a lot of money to fuel these ships. Now, let's see. Was there anything else in here? Nah. This is something that we can't forget about when we talk about cruise lines, and we'll talk about it with CCL in a few minutes. The debt situation and the assigning of shares, diluting the company. You have had these companies absolutely decimated. The government did not come to the rescue for them, and they told them, sorry, you can't sail. What did that do to the company? Well, it was just a straight downward spiral. I mean, let's look at a company. Let me just pull up the chart right here and show you what CCL looked like during COVID. And there you have it. This thing hit a high back in here pre-COVID of about $70, and right before COVID it was about $50, and a couple of weeks later it was sitting at about $5, $6 per share. So you saw these companies just get absolutely decimated with the COVID protocols that were put in place. Now, let's get into some numbers, and I'm actually just going to pull up the Everything Money software to start going through this. For Norwegian, the income statement. So we do have, I mean, they were doing fine. They were growing, rather consistently growing, and then all of a sudden, COVID happened, and they came in from $6.3 billion in revenue to $36 million. Now they're up to 1.17. That is very promising. This is something very promising. But again, let's just go and look at the shares. Their shares outstanding have increased wildly. In 2019, 217 million shares outstanding. They have added 200 million shares on top of all the debt that they took out, on top of all these debt offerings that they've taken out. Okay, so let's go and look at their net income. Their net income was actually consistent. This was a big jump. It's not really important at this point in time, but if you want practice, go and figure out what that was from. 800 million, 969 million, minus 1.07 billion, minus 3.5 billion, minus 4.2 billion. How long is it going to take for them to get back to profitability? Huge question in the cruise industry. And now let's go and look at that very, very scary debt number. Total current assets of 3.21 billion, total current liabilities of 4.18 billion, and total liabilities of 17.75 billion. So guys, riddled with debt. These companies are absolutely riddled with debt. Let us go over to Stock Analyzer tool for Norwegian. Now, the first thing that I see right here, revenue growth in 1 year, 3,129% over 10. Remember, these are totally skewed from the last 3 years. So we're going to have to figure out a way that we can put in realistic numbers here. Revenue growth for Norwegian Cruise over the next 10 years. Let's go with 1, 4, and 7. Do I think 7 is reasonable? I don't know. Maybe the next couple of years, just because of everything that they need to get back to normal. It's almost an anomaly, taking out an anomaly situation, if that makes any sense. Profit margin. Profit margin. Let's stretch it. Let's go 6, 10, and 14. So that gives us a kind of a wide range. I'm going to do the same thing for the free cash flow. These numbers should equal out over a long period of time. And as it sits right now, I really don't know how much better, how much different they can be, because all of this is kind of a guess. 14, 16, 18 for your PEs. I'm sure you can argue lower. I'm sure you can argue higher, but I'm going to go 14, 16, 18, and I'm going to put in a 15% return because I am concerned. I am honestly concerned about where the cruise industry goes from here. Now, if you start looking at it, current price sitting at about $13.75, and I'm looking somewhere in the range of $1.50 to $6 on the high side. And I do think that this is probably a pretty accurate assessment. If you look at where the company's gone over a long period of time, they've gone down, but they've gone down for a reason, and they probably should go lower depending on what their future outlook looks like. Now let's go over to CCL. CCL is in a very similar situation, if not a worse situation. Their debt levels are absolutely out of this world. And not only that, we can go and look at their shares outstanding. I think they've diluted even more than Norwegian. Actually, they haven't. Norwegian has diluted shares more, 693 million to 1.14 billion. On top of that, I think they've taken out about $12 billion in debt and notes, and they just diluted another $1 billion worth of shares about 3 weeks ago. So why don't we run this through Stock Analyzer tool as well? Before I get into the Stock Analyzer for CCL, I want to say this. My name is Mo. I am a value investor with Paul. We look at companies from the perspective of saying, hey, long-term, over 1, 3, 5, 10 years, where is this company going to go? I can't just look at 1 quarter, 1 year, 2 years and say, this company is a buy, this company is not a buy. So join me. I go through a process. I'm going to show you that right here. And stick with me, guys. When you learn this process, you are going to be better off in the long run. I promise you that. So when we look at CCL right now, revenue growth, let's do those same kind of numbers, 4, 8, and we'll go 12 on this one, because I think, if I'm not mistaken, Carnival is recovering a little bit faster as far as getting people's butts back on boats. Profit margin, we will go with, let's go 6, 9, and 12. And free cash flow, I'm going to do the exact same. Remember, you cannot go and base it off of these previous numbers. PE, I will go 14, 16, 18 as well. Now, I will have to say this. Pre-COVID, this company was in the best financial position out of all of the cruise line industry companies. And I actually did buy Carnival Cruise back during COVID. Now it's sitting at $10.50. What do I want to do with this thing? Well, I'm getting a price anywhere from $2 to about $8.30, and this to me seems right. But when we're coming down to these levels, I remember having puts at $2.50 here. And when I had those puts, I was saying, well, this is getting down to bankruptcy levels. Now, I was thinking that it was going to get to $2.50 in January of 2021. It did not. So are we looking at the bankruptcy levels? I don't know. Maybe it's a Chapter 11 filing where they just start restructuring. You're going to have to take that risk on yourself. But if you want to get into cruise lines, you need to do a lot of reading, listen to a lot of earnings calls, and understand what the hell you're getting into, because it's very important. Now, let's get into trading. For those of you that are interested in trading, let's look at CCL. You know CCL is one of the most notorious 50% stocks. And those of you that don't know what a 50% stock is, you have a previous high, it could be 52 weeks or more, a previous low, and then you have that middle ground right in the middle. And for CCL, it's about $32. Now, what happens? What is all of this blackness that is just negatively pushing down on the stock, and why can't it break above 32? You had people in the stock up here, and it fell right down. And all of these people are saying, if I can just get 50% of my money back, all I want is 50% back, I'll exit the position. Stock price trickles up, and you get a massive influx of selling. Same thing happens again. Stock price trickles up, all those people start selling again and you're in the situation you're in. So when you have a 50% stock, it's very hard to break over that 50% level. And for this, it's $32. Luckily for me, when I was in this stock, I recognized that. And I ended up selling at $32 on the nose, which call it pure luck, call it paying attention to the chart. But for me, guys, I'm not trading CCL from a long-term perspective. You can come over here and swing trade it. The problem with the swing trade, though, you're stuck under all these major moving averages. It's definitely going to be easier for you to go short on something like this, but I would have to check to see if you can even short a stock like this. Why don't we look at Norwegian just to make sure? It's probably going to look very similar, and it just looks almost identical. You're stuck and smothered between these 4 major moving averages. The play would be try to short this thing down and get a bunch of selling volume coming in. But guys, this is going to be a stock where you need to be very, very patient on both regards, CCL and Norwegian. Guys, if you want to get to know me more, get to know Paul more, get to know Seth more, click on this video right here where we answer some very uncomfortable questions. Catch you on the flippity flop.